In January 2021, a group of strangers on the internet did something Wall Street said was impossible. They took a dying video game store called GameStop and turned it into a weapon aimed directly at the richest hedge funds on the planet. Within days, GameStop stock went from $4 to nearly $500. Billionaire fund managers lost everything. One hedge fund needed an emergency bailout just to survive. And the people who did this, they weren't bankers, they weren't traders, they were college students, fast food workers, truck drivers, regular people on their phones using an app called Robinhood. It was the biggest David versus Goliath moment in the history of money, and it nearly broke the entire financial system. This is the insane true story of the GameStop revolution, the week the internet declared war on Wall Street. GameStop was a joke. By 2020, it was a relic, a chain of brick-and-mortar video game stores in a world that had gone completely digital. People downloaded games now, nobody drove to a mall to buy a disc. Anymore, the company was bleeding money, closing stores by the hundreds. The stock price had collapsed to under $4. Most analysts said GameStop was finished, a dead company walking, and Wall Street agreed. In fact, Wall Street didn't just think GameStop was dying, they were betting on it, aggressively. Here's how. Some of the most powerful hedge funds in the world, including Melvin Capital and Citron Research, were shorting GameStop stock. Short selling means borrowing shares you don't own, selling them at the current price, and then buying them back later when the price drops. If the stock goes down, you profit. If it goes up, you lose. And the higher it goes, the more you lose. By late 2020, GameStop was one of the most shorted stocks on the entire market. Over 140% of the company's available shares had been sold short. That means more shares had been borrowed and sold than actually existed. Read that again. More shares were shorted than existed. That's not just aggressive, that's reckless. It's a bet that assumes the stock can only go in one direction, down. And that recklessness is exactly what a group of strangers on the internet noticed. Deep inside the internet, there was a forum on Reddit called WallStreetBets. It was chaotic, irreverent, full of memes, profanity, and people who called themselves degenerates and diamond hands. It was the last place anyone would expect a financial revolution to start. But buried in the noise were people who actually understood the stock market. And one of them was a man who went by the username DeepF ingValue. His real name was Keith Gill, a financial analyst from Massachusetts, a regular guy who wore headbands and streamed stock analysis from his basement. Keith had been quietly buying GameStop stock for over a year, not because he believed in meme culture, because he believed the company was undervalued. He thought new leadership could turn it around. He saw the short interest and recognized something most professionals had missed. GameStop wasn't just a bad stock. It was a trap set by hedge funds that could be turned against them. Here's the idea that changed everything. It's called a short squeeze. If millions of small investors all bought GameStop at the same time, the price would start rising, and as the price rose, the hedge funds who had shorted it would start losing money. At some point, they'd be forced to buy back the shares they'd borrowed, just to limit their losses. But buying shares pushes the price even higher, which forces more short sellers to buy, which pushes the price higher still. It's a chain reaction, a financial explosion, and the more people who pile in, the bigger the bomb. In January 2021, WallStreetBets lit the fuse. Keith Gill's posts went viral. Millions of Reddit users, most of them young, many of them using the Robinhood app, started buying GameStop, not because they expected to get rich, because they wanted to hurt the hedge funds. They wanted to prove that ordinary people could beat Wall Street at its own game. And it worked. On January 4th, GameStop was trading at around $17. By January 27th, it hit $347. The next day, it touched $483 in pre-market trading. A stock that Wall Street had left for dead had risen over 2,000% in less than a month. Melvin Capital, one of the hedge funds that had bet the most against GameStop, lost 53% of its entire portfolio. It needed a $2.75 billion emergency injection from Citadel and 0.72 just to stay alive. Citron Research, another prominent short seller, announced it would stop publishing short reports altogether. Hedge funds were bleeding, and the internet was celebrating. Memes flooded every platform. Diamond hand emojis, rocket ships. Apes together strong. It wasn't just a trade anymore, it was a movement, a cultural event. The little guy was finally fighting back. And then, everything went wrong. On January 2028, 2021, Robinhood, the app that had enabled millions of ordinary people to buy GameStop, did the unthinkable. They removed the buy button. Users could sell their GameStop shares, but they could not buy more. The very tool that had given power to the people had taken that power away at the most critical moment. The stock immediately crashed, from nearly $500 back down to $112 in a single day. The internet erupted with rage. Users felt betrayed. Politicians from both the left and the right were furious. Conspiracy theories exploded. People believed Robinhood had been pressured by Citadel, one of the firms that had bailed out Melvin Capital, to shut down buying and protect the hedge funds. Robinhood CEO Vlad Tenev was dragged before Congress. He explained that Robinhood had faced a liquidity crisis. The clearinghouse that processed trades demanded billions in collateral overnight. Robinhood simply didn't have the cash. Restricting purchases was the only way to stay operational. It may have been the truth, but it didn't matter. The damage was done. The company that had branded itself as the democratizer of finance looked like it was protecting the very people it promised to fight. Class action lawsuits were filed, Robinhood's reputation was shattered. And the GameStop rally, which had briefly united millions of people against Wall Street, collapsed under the weight of the system it was trying to break. But the story didn't end there. Keith Gill was called before Congress too. He showed up wearing the same headband and casual clothes he wore in his streams. When asked if he would still buy GameStop at current prices, he said simply yes. He believed in the stock, and he hadn't sold a single share. He became a folk hero. The internet's version of Robinhood, long before the app ever claimed that title. GameStop's stock eventually settled. Melvin Capital never recovered and shut down permanently in 2022. Citron Research stopped shorting stocks for good. Robinhood went public later that year, but its stock tanked immediately, partly because of the reputational damage. And the broader consequences? They were seismic. Regulators began re-examining payment for order flow, the practice that let Robinhood offer free trades. Congress debated new rules for short selling. The SEC launched investigations, and the entire financial industry was forced to acknowledge something it had long denied. Retail investors are not dumb money. They are a force. And when they organize, they can shake the foundations of Wall Street itself. If this story blew your mind, hit subscribe right now. We tell stories like this every single week. The real stories behind the moments that changed the world. Turn on notifications so you never miss one. The GameStop saga wasn't really about a video game store. It was about power, who has it, who doesn't, and what happens when ordinary people decide they've had enough. For decades, Wall Street operated on one assumption, that regular people were too small, too dumb, and too disorganized to matter. That the stock market was a playground for the rich and a minefield for everyone else. In January 2021, a group of strangers on the internet proved that assumption wrong. They didn't have Bloomberg terminals, they didn't have Ivy League degrees, they didn't have billions in managed assets, they had phones, they had Reddit, and they had each other. The system pushed back, the buy button was removed, the rally was crushed, and most of the people who bought GameStop at the top lost money. But the message was sent, loud and clear. The little guy can fight back. The game is rigged, but it's not unbreakable, and Wall Street will never look at a meme the same way again.